Very good afternoon, dear friends and colleagues, and we are very happy that you have taken time to join us for this afternoon's session. And the theme is WTO Agreement on E-commerce Digital Trade for All. I know it's late in the afternoon, and it's a beautiful day, so we'll start on time and we'll finish on time. That's my promise to you. Um, First, let me introduce myself. My name is Tan Hang Seng. I'm Singapore's ambassador and permanent representative to the WTO and the moderator for this panel. We are indeed very appreciative and delighted to have this esteemed panel with us. And let me just briefly introduce them. Starting from my left, we have Paula Costin, who is the head of policy of International Chambers of Commerce Brazil. And next to her is Pascal Kernest, who is the managing director of European Services Forum. And next to Pascal is Toru Homma, who is the senior advisor to the CEO of the African Union Development Agency, and is also a senior advisor in JICA. So he must be a very wise man to be advisor to two CEOs. And last but not least, we have Gareth Tan, who is a fellow Singaporean, who is the regional lead for digital prosperity for Asia. Before we begin the panel discussion, allow me to just make 3 points to set the context for today's discussion. First, I would like to address a question. What is the significance of the agreement on e-commerce? In essence, the agreement will be the first set of baseline binding global rules that covers a wide range of issues that are fundamental to digital trade. At a systemic level, the agreement represents a revitalization of global trade rules making and a shot in the arm for the WTO. Second, how does the agreement benefit businesses and consumers? I think it does so in 3 important ways. One, the agreement will provide greater operating clarity and lower cost for businesses across a large proportion of global trade. Currently, there are 71 co-sponsors of the agreement, and collectively, we represent approximately 70% of global digital trade. Notably, the agreement will also preserve the ban on custom duties on electronic transmissions. 2, the agreement will unlock benefits for MSMEs, women, and youth entrepreneurs. For example, the International Finance Corporation has estimated that women-owned MSMEs in Southeast Asia and Africa have the potential to grow by US $300 billion by 2030 if they engage more extensively in e-commerce. The agreement will also help smaller players reduce costs while extending their reach to overseas markets. 3, the agreement will benefit consumers by strengthening consumer protection through promotion of access to recourse mechanisms when consumers make online purchases from overseas, and you will also tackle spam. Third, what are the next steps going forward? Going forward, we will focus on 3 issues. 1, we will continue to seek incorporation of the agreement into the WTO legal architecture. This is a top priority because the 71 co-sponsors are determined that after more than 5 years of hard work, the agreement must be implemented so that members can reap its benefits. Given that the agreement was initiated in the WTO, negotiated in the WTO, and concluded in the WTO, it is by all definitions a WTO agreement. 2, we have ramped up the work on capacity building significantly to prepare for the agreement's implementation. For example, through the JSI Capacity Building Framework, we have developed collaboration with international organizations such as UNCTAD, the World Bank, and ICC to provide assistance to help developing members level up and strengthen their readiness for digital trade. 3, we will continue to grow the circle of the agreement's membership. The agreement is an inclusive plurilateral initiative that remains open to all and will continue to encourage and welcome as many members as possible. With these remarks, let me now deal with some administrative arrangements. I will start with 2 rounds of individual questions for each panelist before opening the floor for questions. I'll encourage our panelists to keep their statements to within 5 minutes so that we can maximize our time here. So without further ado, allow me to pose the first question to Paula. Paula, the ICC has a broad membership of over 45 million companies across 170 countries, and they cover a wide spectrum of industries and sectors. Hence, it will be illuminating to hear from you why the agreement is important to your members, what concrete benefits do your members hope to derive from the agreement. So the floor is yours, Paula.
Thank you, Ambassador Tan, for inviting ICC to this panel and for the opportunity to speak a little about the benefits of the JSI e-commerce for business. So one of the key messages that ICC brings to this edition of the public forum is that trade rules must reflect the economy of tomorrow. And we all know that tomorrow will not be less digital than today already is. So my answer to your question will be framed on how JSI can support the economy of tomorrow from a global business perspective, including from Latin America, from where I come from. As you kindly mentioned, ICC has a truly global membership. It is from SMEs to the world's largest multinationals and across every sector of the economy. What unites our plural voice here today is the need for global rules in the way that digital trade is framed. And business expect mainly 3 aspects from this framework and from JSI: stability, predictability, and interoperability. These 3 give the confidence that business need for long-term decision-making. And in that sense, the JSI matters to 2 specific points. The first one is to ensure open digital trade. JSI establishes predictable rules, reduces barriers to trade and costs, allowing business of all sizes to thrive and be connected to global markets. It fosters inclusive growth and reduces the digital divide. And second, it builds trust and resilience. The agreement addresses issues on consumer protection, cybersecurity, and paperless trading. It is designed to enhance trust, innovation, and supply chain efficiency in the digital economy. These aspects all increase transparency, reduce the fragmentation, and promote development. But beyond the benefits that were already stated, I would be remiss not to mention one provision of particular interest for ICC, which is the JSI Article 11 that establishes a permanent ban on the imposition of customs duties on electronic transmissions. I know Pascal will have a deep dive on this, but I just had to say that from an ICC perspective, we support this JSI article 100%. The future of e-commerce and digital trade is uncertain and at risk, considering the potential failure of the moratorium renewal at MC14 next year. And we are not standing here alone with this message. There is a global industry statement for the renewal of the WTO moratorium, and it is supported already by over 170 business associations across the world, all echoing this single message. And this is not important only for business to operate and invest. It's mostly for people, the consumers, who will be paying this very high price. So the possibility of implying more costs to trade is not the way to go, and we believe the JSI can prevent it permanently. I also want to stress that digital trade is not a niche. All sectors of the economy rely on cross-border data flows, e-payments, online platforms, electronic documents and signatures, etc. And this might be obvious for people in this room, but not outside of the trade bubble. We don't see it in newspapers covers, at least in Brazil. All we see are the big announcements, EU-Mercosur agreements, EU-EFTA agreements, Mercosur, European Union, Mercosur, EFTA, Mercosur, Singapore, of course, I had to mention that, and they are all very much appreciated. We are very happy about them. But what I'm saying is that I do think that we have to spread the word about JSI and other WTO negotiations. There is a lack of knowledge from many different industry sectors and from society in general about the potential benefits and the impacts of this discussion. And as ICC, we are deeply committed to engage constructively as the end users of the trading system. Thank you. That was for my first answer.
Thank you, Paula, for that very comprehensive response. Indeed, as you can see from the composition of the panel, we firmly believe that the perspectives of industry is critical, given that the agreement, the e-commerce agreement, must be relevant and meaningful for companies, entrepreneurs, and consumers. To give you a sense of how far-reaching digital trade is, over two-thirds of global economic output is linked to digital transactions, and around 25% of global trade is digital trade. So thank you very much, Paula, for highlighting the importance of Article 11, which in a way is the crown jewel of the e-commerce agreement. It's important, as we have heard, for ICC Brazil and its members across the world because it provides stability, interoperability, enhances trust and resilience, and reduce fragmentation. So thank you very much. Let me now turn to Pascal. Pascal's studies have constantly shown that digital trade is a key driver of economic growth, in particular in the services sector. The European Services Forum represents over 30 European and national business federations covering 20 services sectors. So we'll be very interested to hear how you see the agreement supporting the growth of trade in services.
Well, Ambassador, thank you very much, and thank you for the invitation. Happy to be here. This agreement on e-commerce for us is a crucial agreement. The European Union is the biggest exporter and importer of trading services. And we export 1.5 trillion of euros per year, and we import 1.3 trillion of euros last year. So that's 3 trillion of trade, which represents 37 total trade of the European Union. So it's very significant. There is none of one of these transactions which have not involved computer talking to computer, actually many times. So all of this trade, in a way or another, is digital. That's the reason why we consider that this agreement on e-commerce is very important. We talk about here the tourism sector. You coming here, booking your plane, booking your hotel, paying the restaurant, that is digital nowadays. So same if you go to the banks, actually the banks are closing down their offices because they come digital. If you talk about IT sector, of course it is digital. If you take about maritime transport and logistics sector, multiple communications to have the orders, filling the cargoes, shipping, so all of that is digital. So the things which are doing every day online, which we don't realize, but it is about international trading services. When you send an email outside, when you put an order online, when you sign a contract online, when you have a payment online, when you have a maintenance online again and again, you know, all of that is thing. And I think it's important to give some examples so we know exactly what we're talking about and why companies are interested. And actually, it's much beyond the services sectors. Also, the manufacturing sectors are absolutely directly engaged. And we talked about this week about artificial intelligence. All machines now have electronic sensors, and they send information to all of those through satellite, through cable, through whatever communication tools you have, which means that we need to have the infrastructure into place. So all the economy is benefiting from the digital trade. So this agreement indeed has been negotiated and concluded in WTO, and we will very much support the fact that we keep this agreement in the WTO. It is a plurilateral agreement so far, but we certainly encourage all the signatory of this agreement to implement the agreement without waiting to have it incorporated into the WTO, although this is what we want as an ultimate game. Because this agreement, what is it talking about? You know, we talk about global rules of e-commerce. What does it mean? You know, you need to go and dive a bit into this agreement to understand what we're talking about. We're talking about e-signature, recognition by all the players that they recognize the e-signature of their own country. So assimilating that these national legislation is actually going to be recognized outside in another country. E-authentication, e-contract, e-invoicing, e-payment, all of those things are into this agreement and are actually putting rules to make sure that the e-commerce are going to be there. Also, some article on consumer trust. Also, anti-spam. All of you have some spam in your email inbox every day. Well, you know, there are rules now that we want the countries to go over there. Some rules on data privacy. Some rules on paperless trading. So, and of course, I will insist on the famous moratorium. So on a permanent ban for the countries who are signing this agreement, they commit not to raise tariff on services trade. It's called electronic transmissions, but electronic transmissions is actually communication between computers, and that is a service. And therefore, if you would allow to open the possibility to have a tariff on these communications, it would mean that 25% or 26% of the world trade, which is not yet touched by services, might be touched by services. So we are very happy that this agreement is having this set of rules now. And of course, we would like to have more countries joining this agreement because we believe that having global rules should encompass all countries, and we are encouraging other countries to join in, including the LDC countries, including all the small and medium companies are going to be winning out of this, and there are many surveys in favor of that. And this agreement is also complementing existing agreements. It's not in an empty. You have an agreement which is actually using some part of the ITS, some part of the trade facilitation agreement, some part of the TRIPS, some part of the GATS agreement, of course. So all of that is part of an infrastructure which is already there and is topping up. And this is what we are. So I mean, I could go for long for advantages of this agreement, but I stop here for the first reason. Thank you.
Well, thank you very much, Pascal, for making the very important point that digital trade actually touches almost every aspect of our daily lives. And you have also highlighted the advantages and the benefits of the e-commerce agreement in a very convincing way. I want to thank you for that. I'm sure what you have said resonates with many of us in the room, because as we know, digitally delivered services exceeded 4.6 trillion last year, which represented a robust 9% year-on-year increase. I'm also impressed to learn that collectively, digitally delivered services account for 3 trillion euro worth of trade in the European Union. So thank you very much for that. This brings me to my next question, which is for Toru. many of the provisions and articles in the agreement, the e-commerce agreement, echo those in the African Continental Free Trade Area Digital Protocol. In your view, how can the e-commerce agreement help Africa build a unified digital market and support African businesses' participation in the global economy? We'll very much like to hear your views. Thank you.
Thank you, Chair. Thank you, Ambassador. It is great honor to be here as one of the speaker. Thank you very much for this opportunity. I'm talking on my personal capacity. And first of all, Africa. Africa is, it's digital. And like the most famous, the M-Pesa, that is in Kenya, which is doing the mobile money transfer services that was grown about 10 years ago. So that in some, yes, the statistics said, so that about in 4 years ago, Africa's share of international mobile money transfer is 70%. 70% of entire international mobile money transfer born in Africa. Africa's smartphone penetration rate is 60%. So there are a lot of credit data scoring services. This is developed by startups and also others. It is working for fintech or agri-tech or health tech. So these becomes the fundamentals, the infrastructures. And there are some big e-commerce services or players in Africa, such as Jumia in Nigeria. This is Africa's very first unicorn company. So, and also the sandbox provisions for any new services of regulations. For example, Rwanda is demonstrating this kind of platform to provide internationally. So such and such. So there are, we can see a lot of digital economy grown in Africa. So now the chair mentioned about the AFCFTA. For those who are not familiar with the AFCFTA, AFCFTA is African Continental Free Trade Area. There are 54 AU, African Union member states, among 55 have already signed. In terms of the number of the member states, this is the largest FTA in the world at this moment. It accommodates 1.3 billion people connected. And also with the combined GDP, it's 3.4 trillion US dollars. And that was AFCFTA entered into force in 2019, May 30th. May 30th is also my birthday, so that's why I remember very well. Yes. And there are phase 1, phase 2. Phase 1 is the trading goods, trading services, etc. And phase 2, there are several provisions. One of them is the digital protocol. That was approved, adopted in 2024, February, in its assembly of head of states of African Union. On the other hand, so WTO agreement on e-commerce, JSI, and there within the 91 members, African countries, there are 9 African countries, those which have the digital assets. For example, Nigeria is famous for Nollywood, and Burkina Faso is famous for the film festival, for Africa's largest film festival. Cote d'Ivoire, its music industry is grown, and Japan's Sony Music set its first office in Cote d'Ivoire. Such and such. So there are growing domestic market demand for digital. So I hope that this kind, the international context to contribute to the local economy in terms of the digital or e-commerce, to the local economy and local the populations for their businesses and consumers with the more safe and international protocol So that may corresponds and contributes to the local economy. I stop here. Thank you very much.
Thank you very much, Toru. We have seen exemplary discipline from all the panelists who have kept to their time. Thank you very much. Like you, Toru, I believed that not just in Africa, but in many other regions with developing and LDC countries, they stand to gain tremendous benefit from greater integration through participation in the e-commerce agreement. Thank you also for bringing up interesting examples to illustrate the growing importance of digital trade in Africa. At the last panel that I was on, I learned that out of the 9 unicorns in Africa, 5 are in Nigeria. A figure that speaks to this is the WTO and World Bank's estimate that Africa's digital trade in services will increase by $74 billion and it will double its global share by 2040. So thank you very much. The fourth question that I have in the first round goes to Gareth. Gareth, I would like to hear your take as the representative of a business chamber based in Asia Pacific, which is also home to many MSMEs. The agreement contains many provisions and articles which are fundamental to support businesses in various digital trade activities. What are some of the challenges that companies in the Asia Pacific region encounter today in terms of tapping into digital trade opportunities? Floor is yours.
Thank you so much for the question, Ambassador, and for the opportunity to be at this panel discussing a topic that is near and dear to our hearts. As you pointed out, the Digital Prosperity for Asia Coalition represents small businesses and digital startups from across the Asia Pacific, and we aim to offer them an edge in terms of navigating digital regulation in areas like data, AI, and trade policy. Perhaps some might find this a touch reductive, but at DPA, we have found it very important to condense the points that we make to our members and on behalf of our members to be as straightforward as possible. This is not because we intend any condescension, but because, fundamentally speaking, startups and small businesses are exactly as the name implies, small. They don't have time to waste on things that are not immediately applicable to their business case. So we try and assess regulations and kind of like the impact of regulations according to how much they affect what we call our 4 Cs: cost, complexity, certainty, and choice. To be a bit more granular, there are really 2 Cs to avoid and 2 Cs to look for. Cost is the most important factor here because it's really the existential one, right? It has effects that cascade across all of the other dimensions, but the point of it is that small businesses and digital startups have limited resources that they need to balance with their expenses, and if they can't do that, they die. That's just how it works. Complexity adds to cost and forces businesses to commit resources and to compliance and due diligence, which they would rather be committing to, improving their businesses or finding new markets. And ultimately, complexity is something that is important to emphasize that large businesses can navigate much better than small businesses. Thank you. That large businesses can navigate much better than small businesses. I mean, at the end of the day, if an Amazon or Google or Microsoft wants to go into a new country and they encounter any regulatory challenges, what do? They just hire somebody there, right? Small businesses do not have that option, right? The DPA believes that digital trade, certainty, I've got the other 2 because those are the ones that we're trying to actually look for. Certainty addresses how much regulation or policy initiative affects the stability of a market, and therefore how far ahead companies can plan given the information they have on hand about the way in which the market is going to evolve or change. And finally, the last C is choice, addressing how much freedom a particular policy or particular policy environment gives companies to choose the tools that they need to use given the circumstances that they are in, whether that be hardware tools or software tools. So again, it's cost, complexity, certainty, and choice. The DPA believes that Digital trade is a foremost concern for us because it addresses all of the 4Cs in very, very impactful ways, but also that small businesses really don't know very much about digital trade. So take the moratorium on customs duties on electronic transmissions, for example, which was mentioned just now, and which we believe forms the basis of the digital economy, of the modern digital economy as we know it. I can tell you for a fact that before meeting us, most of our businesses, most of our members had no idea that the moratorium even existed, even though their business models, even though the moratorium enabled their business models to exist. And furthermore, you could generally see, one of two reactions when you read out the entire extremely long title of the moratorium. Their eyes would either glaze over or they would become very, very scared, basically, right? But when you explain it to them in terms that they can understand, that the moratorium stops countries from imposing customs duties or tariffs on digital goods and services, then suddenly it clicks, right? But for many of these businesses, forums like this one seem very, very far away. And the content of the discussions that we're having today would be regarded as too arcane and too removed from their everyday experience to really matter to them, for them to really pay attention. So how I would say we can best help small businesses is by focusing in on simplicity and impact. In my view, the WTO still remains one of the platforms where policymakers and governments can make the greatest contributions to supporting the ability of digital startups and small businesses to function. The moratorium works because despite its very, very intimidating name, it is a broad and binding obligation in all countries. It is simple and impactful and establishes a baseline of expectations that gives businesses certainty in an area that they can't otherwise control. Not all of them can be here in Geneva with you, talking to you today, right? So the e-commerce agreement has the capacity to expand this relevance of the WTO to new areas of digital trade and create alignments on standardization across all WTO member states that could reduce cost and complexity by a factor and establish new baselines across a range of other areas, facilitating more of such agreements and alignments between all WTO members would be incredibly impactful to digital business across the world. Thanks.
Thank you very much, Gareth, for giving us a good sense and feel of the unique challenges that are faced by MSMEs. I'm particularly taken by your characterization of the e-commerce agreement as simple and impactful. And that is what we really strive to do, or we need to strive to do here at the WTO, to deliver outcomes that are simple but impactful. I just seen a hand raised, but I'll ask you to hold your horses because I would now like to proceed to the second round of questions for the panelists, and I definitely hope that we will be able to have some time at the end for an exchange of views. Paula, coming back to you, since the beginning of negotiations in 2019, the global trade landscape has evolved significantly, and businesses are faced with greater uncertainties and challenges. One of the ways in which the ICC has supported businesses is through promoting the harmonization of standards, including through its Digital Standards Initiative, or DSI. Are there any particular standards or practices in the agreement on e-commerce that you think would be particularly useful for companies, and how can they benefit in practical terms?
Thank you, Ambassador, for this question. And indeed, as a business association, ICC has this position to sense not only opportunities, but also challenges for business around the world. And to us, JSI grows each day in relevance, and it can be a problem solver in many, many aspects. And the business community, of course, welcomes the co-conveners' efforts on this initiative. When the negotiations began in 2019, e-commerce and digital trade were already transforming the global trade, but the scale and speed of that transformation have since accelerated. Over the same period, the trading system has become more fragmented, politicized, and less predictable. and uncertainty is currently the most significant trade-related concern for business. Geopolitics, inflation, and tariffs are top of the list obstacles, along with regional and unilateral barriers to trade. And this is even more manifested regarding the digital landscape due to 2 points. The first one is regulatory patchwork. There is a rising data localization measures, divergent rules for privacy, cybersecurity, payments, and digital content, and different trust regimes. And the second one is the operational cost, as Gareth has already raised as well. The need for multiple data centers and consistent technical standards raise costs and cyber risks. For example, giving you a practical example, the growing demand for computing capacity driven by advances in generative AI has intensified the needs for robust infrastructure for data processing, storage, and data centers. There is a true global race for data centers investments. And in Brazil, for instance, we are very well positioned for this, and we have a huge comparative advantage with the renewable and low-cost energy in our country. But to seize the opportunity and attract foreign investments, it is important to be aligned with global standards and not diverge. And JSI can help business offering with the agreement a secure framework to seize those opportunities. The ability to access technology and transfer data across international digital networks is really of central importance to business operations, customers, workers, and supply chain partners. No business can engage or compete on a level playing field without it. And to fully benefit from digital trade, ICC has made it a top priority through initiatives like the ICC Digital Standards Initiative, DSI. This initiative addresses critical challenges that create barriers to the digitalization of global trade. And we advocate globally for the moratorium, but also for the adoption of UNCITRAL model law on electronic commerce, MILITER. The GSI also supports the adoption of MILITER in its Article 4, and the provision encourages WTO members to legally recognize electronic transferable records, and it enables paperless trade. MILITER provides a framework to align national laws, and it enables the legal use of electronic transferable records both domestically and across borders. It promotes interoperability and creates the legal certainty that business community needs to confidently replace paper with digital documents. It all while saving time, cutting costs, and reducing fraud. So there is a compliance sense that is really important here as well. And more broadly, the ICC Digital Standards Initiative has just launched a global roadmap for trade digitalization. It is a comprehensive blueprint with practical steps that governments and business can act on now to unlock trillions in efficiency gains in trade. I invite you all to read it and make a very good use of it. But I will stop here for this question. Thank you.
Thank you very much, Paula, for your comprehensive response. It's encouraging to see the efforts of the ICC to help your companies, your members reduce costs and cut through the noise by adopting harmonized, internationally recognized standards, which represent one of the key objectives of the agreement on e-commerce. And just for your information, the OECD recently found that just a 10% improvement in automating border procedures and streamlining shipping documents could boost global goods exports by up to 18%. With that, let me move on to the next question, which is for Pascal. And the question that I'd like to pose to you on supporting businesses by providing greater operational certainty. One of the most significant outcomes of the agreement is the enduring commitment not to impose custom duties on electronic transmissions. As we all know, this will be the first binding commitment made at a global level. The European Services Forum has been a strong advocate From your perspective, how would such a provision improve certainty for businesses? Could this improve business confidence and cross-border collaboration in a time of heightened fragmentation?
Well, thank you very much for these questions. The answer is yes. Yes. For us, it's one of the most important benefits of this agreement that I have already alluded in my first reply. So we want no tariff on services. I mean, everything started in 1998 when the e-commerce work program has been put into place. And they had decided at that time already not to impose tariff on electronic transmissions. But it is true, it's a bit old. It was in 1998, it was the beginning of the internet. It was the beginning of e-commerce. It was not really understanding exactly what was these electronic transmissions. But we have been able to renew this moratorium and this e-commerce work program for the last 20 years. But it is true it has been more complicated to renew this moratorium and the last ministerials, and in particular, the very last one in Abu Dhabi. So we have seen that as a danger that maybe the services economy would be subject to tariff. Digital transactions means data flow. They are not a product. In the WTO, you can put a tariff on the product, not on services. So far, the 26% of world trade are not subject to services. But if you focus on trading goods and what's happening in the turmoil in the current situation with the United States, President Trump imposing unilaterally tariff on the rest of the world, suddenly everybody understands what a tariff means, and they know it is bad. So now it would be possibly the same thing for trading services. So we know that we don't want to go there. So we're very glad that the e-commerce agreement is having this provision so that there is no tariff on the services. And we are talking now on a permanent basis because it's a bit boring for the business community that every 2 years we have to bet our future on the good mood of 1 or 2 ministers. And that is something that, we are a bit tired of that. That's the reason why we're asking for a permanent one. Now, if in Yaoundé is going to be difficult to have a permanent one, at least keep it on a 2 years' time or 5 years' time, but you need to keep it. But we welcome this provision. Now, yes, we have been very strong advocate for the moratorium and for the GSI ban. I mean, I should not use GSI anymore. When I arrived in Brussels, in Geneva here, we were still having in mind the GSI on e-commerce. But the word in town is ECA now, which is e-commerce agreement. And we agree on this to use this terminology because it means there is an agreement which is finalized and which is set there, and we have to implement it. So it needs to be legally binding. We would like to have this incorporated into the WTO as an Annex 4, but we should not wait too long. We should not waste this opportunity. I'm old enough to remind that some countries in this building had negotiated a so-called trade in services agreement, and it has been put into the bin after 5 years of negotiation. There is a risk that this agreement on e-commerce will also be for the history, except if we take some actions. And we invite all the countries which are signing this agreement to take some action without waiting for this hopeful incorporation into the legal infrastructure of the WTO. Because yes, this article and the whole agreement will increase business confidence, which is part of your question. There is no doubt because business wants legal certainty. We want predictability. And if we believe that maybe next month we're going to be 10% tariff on the electronic transmissions, of course, companies will slow down their business, waiting for investment to wait and see what's going to happen. International collaboration is also something which we encourage, and you have one possibility for a country, to gives this legal certainty is to unilaterally implement this agreement by itself. And we know that among the 71 countries, that there are already a large batch of them, I would say around 35 or more, which already have incorporated into the national legislation these articles of the e-commerce agreement. So that is already a certainty for the business in these countries. We know that this is part of the regulation, and therefore we have legal certainty there. But we talk about global trade, we talk about international trade. So we know that we would like to have certainty in other countries as well. So there is now many bilateral agreements which have been put into place with digital trade provision. And I think Singapore is probably the pioneer in this one, with many agreements that you have signed with proper digital trade chapter into this. The European Union is now also trying to join this club of countries with a foreign free trade agreement where we have a proper digital trade chapter. We have been a bit late into this race because we had some difficulties to find agreement within the European Union on data privacy and cross-border data flow, but now we have a solution. So now we have a proper agreement. The first one probably which has been allowed the EU to move onward is EU-UK FTA, but now we have other agreement where we have this proper full rules on digital trade, like EU New Zealand, EU Chile, the one in the making, EU Thailand, EU Malaysia, EU Indonesia, EU India, name them. And also because we had agreement with other countries, like with Singapore, like with Japan, where we didn't have a full-fledged digital trade, we had decided that we should go back to the table and include more elaborated rules on digital trade. So we have a revised agreement with the EU, Japan EPA. We have a new digital trade chapter, or agreement it is called actually, DTA, with Singapore and now with Korea, and we're going to start soon with Canada. So the EU is now having this willingness to have more rules. So with that means that certainty for business in these transactions with all these countries is more secure. So we welcome that. Of course, we would like to welcome even further, and the further might be actually the e-commerce agreement where we have 71 countries. So of course, we're supporting that also as well. Thank you very much.
Thank you very much, Pascal, for your resounding yes and your affirmation of the value and the critical importance of the enduring commitment not to impose custom duties on electronic transmissions. I also want to thank you for your timely reminder that the e-commerce agreement should not remain merely a document that may end up on the shelf or worse, in the dustbin. So thank you very much for that. Let me move on to the next question, which is for Toru, and this builds on our earlier discussions on how we can support MSMEs. We know that MSMEs are particularly vulnerable to extended periods of economic uncertainty and shifts in global trading patterns, because as Gareth had pointed out, big companies can cope, but not MSMEs. One of the priorities of your organization is to support MSMEs' participation in digital trade and the digital economy. We'll be very interested to hear from you how you see the e-commerce agreement supporting African MSMEs to scale up their businesses across borders. For example, what are some of the provisions that are most helpful to African MSMEs?
Thank you, Ambassador, for these questions. Yes, as you rightly mentioned, the MSME, micro, small, and medium enterprises are always vulnerable in general. So that in the last several years, so there were a lot of challenges in the pandemic era. So there was a disruption in supply chain, global supply chain, and regional supply chain. So they are faced very much. And also, most recently, the tariff issues, yes, Pascal clearly mentioned, elaborated. And there, for example, in Africa, Africa is one of the small landlocked country. Lesotho became suddenly a famous country because of that tariff. Once set 50% or like that. But anyway, those are, yes, the emerging challenges. But in addition to that, traditionally, there are a lot of challenges what Africa's MSMEs are facing always. That is the access to finance, finance for the operational finance, working capital, and also trade. And also access to market, especially international market. So those are always facing in terms of accesses. And more than that, the capacity, especially for the technological capability to create the new technology or maintain the technology, and also the managerial capacity to run the company itself, and human resources as well. So there are many challenges. On the other hand, there is for digital. Yes, it is also sometimes it's very hard to get the digital services, but digital economy dramatically reduces the cost for transaction and also delivery. That means for MSMEs are better position in terms of the accesses to this kind of the services through digital. That means that may gain the benefits to the MSMEs. On the other hand, the infrastructure is not necessarily MSMEs alone can work. So that the digital infrastructure needs to be set up. That is still challenges. But on the other hand, compared with other infrastructure like road, railway, water, so those other type of infrastructure, digital infrastructure are far better installed. According to the PIDA report, which was set by Auda Nepat AU, PIDA is Program for Infrastructure Development for Africa. Compared with others, for example, one data is the broadband capacity. That is already over exceeding the 2040 target, exceeding 150% of 2040 target already achieved. Likewise, so that means that the digital infrastructure may be in a better position compared with other infrastructure. Now, so when we say SMEs, startups, this is controversial. Startups are SMEs or not, but set aside, let's make it simple. SMEs and the startups in any way, which has innovative ideas with to digital to solve social challenges, they will be in a better position to utilize the digital economy. Now, in terms of the international voices, so last month, there is the international conference, so-called TCAT 9, that is Tokyo International Conference on Africa's Development. This is held in Japan, organized, but co-organized by the government of Japan, United Nations, UNDP, the World Bank, and Africa Union Commission. This is the international set. And there, WTO's, the digital one, was highlighted in its Yokohama Declaration, so-called. There is I quote, "We recognize the importance of the WTO moratorium on customs duties on electronic transmission for member countries and underscore the need for expanding digital trade between Africa and Japan through training programs for African SMEs in e-commerce standards and integration with Japan's digital retail platforms." So likewise, so hope that the international support for MSMEs in the digital economy. Then finally, so for the agreement, for example, the cybersecurity, consumer protection, these are hopefully useful to protect the African domestic consumers and local businesses effectively. Thank you. I stop it.
Thank you very much, Toru, for providing us with a very important perspective from Africa. I'm glad to hear you say that the e-commerce agreement will help to reduce the cost of transactions and delivery. I think this is an important benefit that could accrue to MSMEs. Um, the last question that I have for our panelists goes to Gareth. Gareth, you had earlier spoken about some of the key challenges faced by MSMEs in digital trade. The objective of the e-commerce agreement is precisely to reduce barriers to trade for MSMEs and other businesses. What are some of the provisions in the agreement that are, in your mind, the most important in bringing down costs for MSMEs? And it'll be great if you could share some examples with us.
Sure. I think I touched on the theme of standardization previously, and I think that's an area where the e-commerce agreement builds a decent foundation over the course of Articles 4 through 10 in Section B that can be further built on, as is the case in other agreements. We've seen how, across the world, trade agreements between different governments, both bilaterally, plurilaterally, have aligned on, standards, right? E-invoicing standards, for example, have been aligned to things like PEPAL, right? ISO 20022 have been adopted for e-payment messaging. And that again creates a baseline of alignment and interoperability, which allows small businesses to enter new markets with greater confidence. Again, this can be especially impactful, I think, if specific standards can be designated that apply to all WTO members, because again, it really helps cut down on the ambiguity of having to navigate different standardization protocols across different markets. One of the biggest challenges that many of our small businesses tell us about is that when they enter a new market, they have to kind of navigate an entirely new process of standardization that can be very prohibitive for them to actually even engage with the market at all. So I would say that doubling down on standardization and probably introducing, again, more specificity would really, really significantly help, basically. As for, I think, probably the most important portion of the e-commerce agreement for avoiding future costs, or rather, it's not really avoiding future costs, but stopping the accrual of greater costs, I suppose. I would have to, echo what Paula mentioned just now and point to Article 11 on customs duties, right? Next year at MC14, of course, I think many are bracing for another very exciting discussion regarding the future of the moratorium on customs duties and electronic transmissions. Just by way of reiterating for good measure, the DPA firmly believes that the moratorium is one of the most impactful mechanisms to its members that is in existence at the WTO, again, because it is broad and impactful. To avoid belaboring the point, I'll just refer again to our 4Cs and say that the removal of the moratorium threatens to raise complexity because duties would necessitate accompanying customs declaration processes affecting certainty and cost significantly because of that. I've said this, I've mentioned this multiple times, but I've seen arguments for the expiry of the moratorium that it might lead to greater economic benefit or gain. But I would suggest that, again, a bird in hand is worth two in the bush. The moratorium has stood for a generation now, and policymakers need to very, very carefully weigh whether gambling on whether or not its demise can result in greater gains after what will inevitably be a painful, exhaustive negotiation will really, really benefit the SMEs that comprise 99% of their businesses by number. And they also need to assess how long it is that they're going to take to achieve those gains and how many SMEs are going to survive through that winter. Yeah.
Thank you very much, Gareth, for reminding us that we should not be masochistic and subject ourselves to painful negotiations on this issue at MC14. Thank you again for highlighting the very useful 4C framework of cost, complexity, certainty, and choice. I think we have made good time. We have basically kept to our schedule. Thanks once again to our panelists for the exemplary discipline that you have observed in keeping to the time limit. That means we have about 15 minutes left for questions. And I want to say a big thank you again to our panelists. We have heard very interesting perspectives from 4 different regions, from Latin America, Europe, Africa, and the Asia Pacific. And this is really one of the values of the public forum. It enables us to, in a way, hear from the horse's mouth on how the e-commerce agreement can deliver real benefits to companies, to MSMEs, to women entrepreneurs. And this is important because it keeps us grounded in reality when we conduct our discussions and negotiations here at the WTO. So with that, I would like to open the floor. But before I do that, I request 3 things of you. One, please use the microphone at the table. And before you throw your question, please introduce yourself and direct your question to a particular panelist if that is what you want to do. And finally, please keep your questions succinct. We would want to hear questions, not statements. So with that, I'd like to open the floor. I see a question here. Please go ahead.
Thank you very much. Richard Hill, civil society activist. Unless I'm mistaken, some countries have withdrawn from some portions of the JSI agreement on the grounds that they felt it prematurely limited their national policy space. I believe the US did that. Why shouldn't other countries, that's my question, why shouldn't other countries wait until they have developed their mature national digital governance policies before agreeing to something that would restrict their options? Now, in particular, we've heard a lot about the moratorium on e-customs duties, and I think Ms. Costa mentioned that we need to prepare for the economy of tomorrow. Well, as far as I can tell, the economy of tomorrow is going to have a lot of tariffs on physical goods. So why shouldn't it have tariffs on services, including digital trade? Well, because they're bad for a lot of reasons. But if they're bad, there's no reason to impose them. There is no reason to force countries not to impose them. If they're bad, countries will not impose them. They will see the light and not impose them, as perhaps the US will see the light and withdraw its tariffs on physical goods if they're as bad as they say they are. So why do we try to force countries to do things that are good for them? If they're good for them, they'll do them on their own. Isn't that enough? Thank you.
Thank you for that question. Do anybody on the panel like to take that? Pascal, go ahead.
Well, thank you for the question. It's true, 20 countries have withdrawn from the negotiating group of 92. We're down to 71, and for whatever reason, some of them will decide to join back. Some of them didn't finish their consultation process at home, and hopefully they will come back. Others have decided that they're not ready for a permanent moratorium, and therefore they decided to drop off. That's probably the case of Brazil and Thailand, for instance. And the United States withdrew for other reason that you say they are not ready to at that time with the Biden administration. I understand that the current administration is still not willing to join, probably because it is not the policy of the current administration to bind anything on a multilateral or plurilateral level. So there are many reasons why countries would withdraw. But I agree with you. We hope that US will see light by removing tariff on goods. But I don't think this agreement is forcing anybody. That's the reason why actually some of them drop off. So the idea is not to force anybody. That the idea is that for the countries who are willing to take some commitments, because they know that it's going to be a good way for them to attract business and investment into digital trade. So that is a choice that they're making. That nobody's forcing anybody into this agreement, to my knowledge. Thank you.
Thank you, Pascal. And Gareth.
Yeah, just to respond to that as well. On the point about the moratorium, I think Mr. Hill, you made an excellent point about the fact that the Overton window with regards to trade and tariffs has shifted considerably. The Overton window being, you know, the boundary of acceptability over the past few over just the past few months. And if the Overton window has shifted so quickly, it is precisely that uncertainty that the moratorium guards against for digital goods and services over the course of the following, you know, like few years. You're right that the economy of the future may involve a great many tariffs on goods, but we want to make sure it doesn't involve that many tariffs on services, and that's the entire point of retaining the moratorium. I mean, just as an example, one of our members deals in both digital goods and services. They're an education technology provider. They sell board games that help children to learn how to code, right? But they also provide digital services. Now they are a fully digital company because they can no longer sell the board games because they're produced in China and cannot now be exported affordably to the United States and other places. So, you know, their horizons have intrinsically been limited by the situation, and things like the moratorium prevent that from happening to them wholesale.
Thank you, Gareth. I see two other questions. Just to add a rather philosophical point, it is like saying that, you know, we all know that narcotic drugs are bad, but there are still a lot of abusers out there, which is why they have to be banned. So while we would like to take a very positive view of human nature, unfortunately, human beings being human beings, we are all fallen. Yes, I see a question there and a question here. And a question there. Can I take this one first, this second, and the third one? Okay? Yeah, go ahead.
Thank you very much. It was interesting to hear the concerns about the moratorium because, you know, it seems like some people are concerned it might break the internet and stop exports and things like that. But I noticed that there are many countries that actually have value-added taxes on electronic transmissions, like Australia, the EU, Iceland, India, New Zealand, Norway, Russia, Serbia, South Africa, Korea, Taiwan, Turkey, Switzerland, UAE. And it hasn't broken the internet. SMEs are still exporting. Trade still
Question,
occurs.
please.
Yes. So my question is actually to you, Ambassador, about the electronic authentication provision in the JSI e-commerce in Article 5.3a, where it says that the parties can determine the method of electronic authentication, and we leave it to the private sector to decide that. So it's deregulation. And so, of course, this undermines cybersecurity, like two-factor authentication requirements, encryption requirements, and so on that most countries in the world have. And I was just wondering, what is the problem that this provision was designed to solve? Because usually there's some problem that provisions are designed to address. So I was never clear, like, what is the problem that this provision is designed to solve because of the way it undermines cybersecurity. And yet that seems to be a concern that we've been hearing here. So I wasn't clear why that provision is there. Thanks.
Thank you for that question. I'm the moderator. I'm not a panelist, so I will let one of the panelists respond to your question. Any takers?
I mean,
Go ahead, Pascal.
maybe I respond to the first part, which is on the VAT, and the VAT is not ending trade or activity. I don't think we can. That's the reason why we talk about tariff. Tariff and taxes are not the same thing. A tax is non-discriminatory, so it's touching all action in the country, whatever the nationality of the providers. While the VAT is a tax, and therefore whatever GST you want to call them, they are non-discriminatory. What we don't want is that because a country would choose to impose a tariff on someone else, you will introduce some discrimination. And this is where, and this is happening, the example of just Gareth mentioned a few minutes ago, is that we don't want discriminatory, and we don't want international trade introducing discriminatory among the country in the world. For the Article 5 authentication, I'm just in favor of it, so I don't see why we should not have it. Thank you.
Thank you, Pascal. The lady here, and then the lady at the back.
Okay, thank you, Chair. And I'm from the China Academy of Information and CEIC, Communication Technology. So my question is for Mr. Pascal. like we found that some cutting edge technologies could blur the traditional classification in service sectors. For example, how to classify AI services under the traditional GATS framework. So will the principle of technological neutrality apply? So regarding this, what could be a possible solution? Maybe either to upgrade the traditional trade agreements, for example, GATS, or build a new framework under the GSI or no, the ECA. Thank you.
Thank you for that question, Pascal.
This one is really for me. We have put this question out to ourselves as well. First of all, it is true that the CPC classification is old, and we certainly would like to encourage a review of that. But regarding AI, if you put the question to yourself, what is it exactly? It's actually about data flow. So the regulation on cross-border data flow will apply to all AI. It's just going faster. It's going to be much more efficient. But in the end of the day, it's data going through cables, satellite, and etc. So the regulation, I think there is no need to change and to have a new classification to have some governance of artificial intelligence. That's my position. Maybe I'm not completely true, but
Thank you, Pascal. Would anybody else on the panel like to address this issue on AI? If not, that's okay. I think we have time only for one more question, and then we'll have to call it a day.
Hello, am I heard? Thank you for the wonderful presentations. I'm Xiaowen Tan from the WTO Chair Institute in Shanghai. And my question is that during the presentation, I heard a lot of how the benefits of this JSI is going to provide for the SMEs or even the micro ones. But we witness in the business sector that some business are doing more advanced than what we have in this JSI, but some are lagging behind. So how does reality align with the rules we have in the electronic commerce initiative? Thank you.
Gareth, would you like to tackle that?
I mean, I think it is certainly the case that different companies and will be doing better at other things than I'm afraid. Could you restate that question? I'm sorry.
Of course. I mean, some companies are apparently going ahead of what the rules are talking about. They are more advanced. They have AI, they have everything else. But some companies are lagging behind. But this business reality, I mean, how this reality could align with the rules we have in the e-commerce JSI?
So your question, if I understand you correctly, is on one hand, we have companies that have done very well. On the
Yes.
other hand, there are companies that have not done very well. So how can the e-commerce agreement help both?
Yeah,
that?
how can they cope with this complexity?
I suppose the logical answer is that it is designed to help those that are lagging behind. But as I said, I'm a moderator. I will let my panelists
Yes.
answer your question.
So yeah, if that is the question, then yeah, I mean the look, like I mentioned just now, the e-commerce agreement is what it can potentially do is provide a baseline that allows all companies to share like a shared understanding. Like I said, I mean you've identified correctly that there are definitely going to be companies that are doing better than other companies, bigger that are bigger than other companies. Like I mentioned just now, they will have the resources to navigate the environment regardless of whether or not there's going to be any kind of like barriers, regardless of whether or not the WTO does anything, because they have the scale to be able to execute that. But the e-commerce agreement and mechanisms like the moratorium are in place and help very significantly small businesses that do not have the same kinds of resources to be able to navigate those barriers when they enter a new market. So I hope that answers your question.
Pascal is going to supplement.
Thank you, Ambassador. Well, definitely you will have always companies going much faster and others lagging behind. This is nature for companies like it is for human being. What I want to say is this agreement is not for companies. This companies is an agreement for government to regulate. And it is up for the government if they wish that their own business thrive, that it maybe they consider that it is interesting for them to implement these rules. So we hear very much about the digital divide, and it is true that AI might go even much bigger divide if not all countries understand that this is the road to take. Otherwise, they're going to be lagging behind again even further. But it's interesting to note that into the agreement, for those who are going to be signing this agreement, there is actually a mechanism, a capacity building mechanism to have an assessment of what they need to put into place the regulation, which will help their companies to thrive into the new world of digital and artificial intelligence. So I think that is something for the countries to do, and there is a possibility. But if you're not part of the cake, you will not be receiving this assistance. And I think maybe your question is also leading to what's next for the companies who want to go faster. Living in an empty world is not good. And so having these companies thriving without having regulatory environment, maybe that is something which is going to be difficult. And maybe we should think already about a phase 2 of this agreement, because we know that this agreement, the ECA, has not tackled all issues. And there are issues that the business are really asking to get some provisions on. And we're thinking in particular of the discussion which have not been going up to the end into Geneva for this ECA, but has been tackled already into bilaterals or plurilaterals agreement existing in the world. And that is in particular, for instance, the protection of source code. Should we also have some protection of algorithm? Protection of source code of software and protection of source code of AI algorithm. What is the difference? There are some questions there to discuss. We haven't been able to have regulation in the agreement on banning data localization requirement. This is what companies want, because if you want to thrive into this new digital transition of the economy, the idea is economy of scale. If each company has to have the data server in the country where they're operating because the country is imposing this data localization requirement, we will not go through the wonderful figures which have been put by the World Trade Report yesterday about the AI transforming the world trade and potentially boosting by 40% of the existing today world trade. 40% of increase of world trade. We're talking about tens of trillions here. We will not go there if every single country will have the data localization requirement. So we would like to have a second phase at some stage that this agreement will tackle. But we know it might be also leading to some difficulties because we might lose some members in the road because they're not ready to go there. So the second phase might be also delicate to have negotiations, but I think this is where the business certainly would like to go. Thank you.
Thank you, Pascal. I'm afraid that this is all the time that we have for today. The time has come for us to wrap up our discussions, and I'll just like to thank all our panelists, Paula, Pascal, Toru, and Gareth, for taking time to share your insights with us. I think you agree with me that we have had very insightful and interesting discussions. And I want to thank all of you for staying with us till the end. Thank you for the questions. And can I just invite you to show our appreciation to the panelists, not to me, for their hard work. Thank you and have a nice evening.